Welcome to Factful Finance, where we break down the tough financial questions so you don't have to. Today, we're tackling a huge topic. How do you prepare for a recession after a $4 trillion stock market crash? Now, this isn't just another market dip. This is a massive shakeup, one that's left investors scrambling and caused a lot of uncertainty about the future. So how do we navigate this, stay grounded, and even come out stronger on the other side? Let's dive into this. First, let me hit you with some context. The market just took a huge blow. $4 trillion wiped off the S&P 500, a drop of 8% from its February high. Stocks like Tesla and Apple are taking some serious hits, and with tariffs and policy shifts shaking things up, a recession seems like a very real possibility. The question is, what do you do about it? Do you panic, or do you prepare? Here's the deal. You prepare. But preparation is more than just tightening your belt and hoping for the best. Let's talk about how you can safeguard your financial future, even in the face of a major economic downturn. The first thing you need to do is revisit your budget. When the market starts to crash, the economy feels shaky, and job cuts are more likely. Having a clear, solid budget in place becomes non-negotiable. Trim the fat, cut back on non-essentials, and make sure you're living within your means. Now let's talk emergency savings. I know, this one is a no-brainer, but it's more crucial than ever. Aim for at least 3 to 6 months worth of living expenses in a high-yield savings account. If the market crash has you worried about your job or investments, having a financial cushion can give you peace of mind. But here's a secret that most people forget. Risk management in your investments. Many investors panicked when stocks started to drop, and honestly, who can blame them? However, this is the time to reassess your portfolio. Are you overexposed to stocks? Too heavy on tech? Now's the time to diversify. Think bonds, gold, or even defensive stocks like utilities that tend to hold up better during downturns. A diversified portfolio can help you weather the storm when the market gets volatile. Speaking of stocks, what about that massive $4 trillion loss? The reality is, most of that value came from growth stocks, especially tech. With a recession looming, growth stocks may not perform as well. But here's where the magic happens. Dollar cost averaging. By continuing to invest consistently, even when the market is down, you're buying at lower prices, setting yourself up for growth when the market recovers. If you already have an investment strategy in place, stick to it. But if you're unsure, this could be the moment to consult a financial professional to ensure you're not betting on a sinking ship. And let's not forget the power of reducing debt. With rising interest rates and potential job losses, debt can be the anchor that drags you under. Now is the time to pay off high-interest debt like credit cards and personal loans. Every dollar you pay down now can work harder for you later when things get tough. Lastly, while it might seem counterintuitive, keeping an eye on opportunities is crucial. While a stock market crash can be terrifying, it also brings opportunities for those with cash on hand. Remember, when stocks drop, the opportunity to buy low becomes real. Just make sure you've done your homework. This isn't about betting everything on a single stock or following the herd, but strategically using any spare cash to purchase undervalued assets. So, what should you do now? Start by understanding where you stand financially. Take stock of your savings, your debt, and your investment strategy. Then shift your focus from panic to preparation. Rework your budget, make sure you have an emergency fund, and prepare for an opportunity to grow your wealth during the recovery. No matter how bad it gets, remember, recessions are temporary, but your financial foundation can be long-lasting if you prepare properly. Disclaimer: this content is for educational purposes only. Mentioning any apps, products, or services is not an endorsement. Always consult a certified financial professional for personalized guidance. Which of these strategies are you going to start with? Let me know in the comments below. I'm always curious to hear what's on your mind. And if you found this helpful, hit the like button, subscribe, and turn on those notifications so you don't miss out on what's coming next. If you're ready to take your finances to the next level, there's a video coming up that you won't want to miss. Trust me, you'll be glad you watched it. Click the video on screen now.